Hey everyone, my name is Jack Routledge. I am a former banker, mutual fund salesperson, and loans officer. I'm here to talk about money in the way that I like to do it. No BS, what the banks don't want you to hear, all that jazz. Make sure you like, comment, subscribe to these videos, as well as follow me on Instagram and TikTok. I try to post reels and TikToks every day, as well as some shorts here on the YouTube channel to help me out. Today I'm going to talk about inflation numbers for October. I don't really have any hot takes or opinions in here, just some raw data and a little bit of information to give context to the world economy. So let's dive into it. So straight off the top, all of this data is from Wednesday, November 16th, 2022. Inflation in Canada as of October 22 is sticking at 6.9% currently. I'm going to break down that number and we'll see what's driving and contributing to that here. So in October, prices generally rose 0.7% month over month, with most of that being driven by fuel prices and mortgage interest costs. As Canadian homeowners are refinancing and taking out new mortgages at higher prices, they are unable to buy quite as expensive properties, and they are paying more for those properties now with rates being where they are. The mortgage interest index is really pushing inflation at the moment here. The bright side that we're seeing of some of these numbers that came out is that meat, fruit, and vegetables, all fresh obviously, are actually hovering at less than 10% inflation now, which is pretty good on the grocery front. They're slowing down grocery inflation and helping all item CPI come down a little bit as well. The other upside from 2022 October inflation numbers is that year-over-year wage increases compared to October 2021 to October 2022 are up 5.6%. So people are getting paid on average 5.6% more than they were the previous year. That said, we are still experiencing declines in purchasing power due to persistent inflation. We're still not able to have our wages keep up with the cost of living. That said, the change in purchasing power was less than in September 2022, so you are seeing less of a gap between wage changes and inflation. One of the biggest drivers in October 2022's inflation numbers have been fuel prices. So fuel prices have grown 9.2% since September 2022, so just 1 month ago, with a 17.2% growth since October 2021. So we are seeing fairly significant changes in oil prices and gas prices. The driver for that is OPEC Plus restricting production due to economic outlook, as well as a weaker dollar pushing gas prices up, and we don't have a ton of local refining capacity. We do have a lot of oil, but not refinery capacity here in Canada, so we import a lot of our gasoline. Food inflation, despite meat, vegetables, and fruit being down a little bit, is still quite high, averaging 10.1% more per year compared to last year. This is the 11th month in a row that grocery items have increased faster than all items CPI at 11%. So grocery prices are a driver of all items CPI at the moment. Items like fresh and dry pasta are up 44.8% year over year. Lettuce is up 30.2%, rice 14.7%, and other common items are far higher than the average growth. So we're seeing fresh items are fairly low compared to the average growth, but we're still seeing packaged items still being quite a bit higher than our comparative growth and compared to the last year as well. Commodity food items such as dairy and eggs are up 10.6% and 13.8% respectively, and this is due to approved producer price increases due to their governing boards here in Canada as well. So those are commoditized items, but they did get approval to charge more for them as of this year. If you take a look at housing costs, the housing replacement index, which measures new homes, slowed to 8.6% in October and has been decelerating since May 2022. Manitoba was the only province to see a drop in property taxes at negative 2.8% year-over-year growth, and that's due to the reduction in our provincial education tax here. Rent prices have increased 4.7% since October 2021, and that's the 9th consecutive month here in Canada of rent increases being more than 4%. So then what does this all mean? So things are going to continue to get more expensive and your buying power will continue to decrease for the foreseeable future. Unfortunately, it is a persistent global issue, inflation going on. It is not just a local issue here in Canada or North America or just the developing countries. Pretty much every country is experiencing inflation in some matter or form right now, and 2022 inflation numbers are sticking at about 8.8% year over year globally, counting all economies that are measured. That said, advanced economies like North America and Europe are experiencing slightly lower than average inflation than the global at 7.2%, and Canada's at 6.9%, so we're even a little bit lower than our comparative advanced economies here. As the war in Ukraine due to Russia's invasion continues, OPEC Plus continues to flex their market influence on the oil and gas market, as well as monetary policy continuing to tighten due to aggressive quantitative easing during the pandemic. We are going to continue to see inflation in certain sectors and probably across the board for still another year or two, I think is what the projections are saying. Some good news in all of this, though, is that semiconductor lead times continue to drop, and global shipping costs also continue to fall. We're averaging about $3,200 per shipping container right now, compared to pre-pandemic levels of about $1,900. So the peak was $10,000 for shipping container movement in 2021, I believe. So seeing that drop back down is going to really help some of the supply chain issues that we're experiencing right now. Recession indicators like unemployment are still at 5.2% in October 2022, and so that's pretty close to 100% of the available labor force being in work, which is always good for the economy. So if we can get costs under control, I think that we are going to continue to be able to be a functioning and growing country into the future. Thanks for watching. Like, comment, subscribe. I'll see you next time. Let me know if you like inflation roundups, and I can start doing them a little bit more often. Thank you.